The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and we have a reprieve for the tech stocks, or do we? A small reprieve. The president already pushing back on the reprieve for some of those tariffs from China for the tech stocks, but nonetheless, you have Apple trading higher, NVIDIA higher this morning, markets higher as well. We did get some volume drying up on Friday. Markets this morning, though, how about the S&Ps? Up by 87 points or 1.6% to the upside. What I will say is we're coming right up to where we were on that acceleration on the 90-day pause. That high was 55.20. We've hit 54.84 so far this morning. And that area also correlating to the lows we had on March 13th, 55.09. That's a 50% of the entire retracement. So important technical area that we're bouncing to this morning. We'll go over the equities as well. You talk about an acceleration. I think Apple's 25% off the bottom that we're at not that long ago. NASDAQ 100. We're bouncing up by more than 2%, up 384 points right now, 19,189. Pretty similar action, whether you're talking about a 50% retracement, okay, which is exactly where the lows lined up from March 12th as well. So you're going to need an acceleration to get through this area. We're back to basically the highs from that acceleration on last Wednesday, the 90-day reprieve, similar action, but nonetheless, you have the NASDAQ 100 trading higher. Dow up by 1.1%. Pretty remarkable how Dow, S&P, NASDAQ, even with the tech stocks, even with the divergence that you have happening with some equities, whether you're talking about tariff exposure or not, all the indices, and I don't agree with the Dow at all in terms of the way that they price, weight everything, but nonetheless, the Dow, right back to the 50% retracement and right where you were on March 13th. But check out the volume before we jump around to the equities. Friday's volume, not as encouraging as you might like to see. Okay, we had a real drop-off on Friday's volume as the markets melted higher. We'll see if we can get some follow-through to the upside at an important technical area on those indices. Crude catching a bid right now. Yeah, crude up by 56 pennies. We're at 62.06. We jumped to yields, and we jumped to the dollar. Now, this was at about 7:30 this morning. The 10-year was at 4.44. Forgive me. Let me get back to there. We're going to get to the Apple article. Checking out the yields. Yeah, we're still 4.43. Okay, so we got a little bit of higher price, lower yield right now. 4.43 is the number for the 10-year right now. But, boy, you see the drop-off we had, right? You go up, you get it all back nonetheless. 110.05 right now, and we got the 10-year flirting with almost 4.5%. We'll see how today goes. And the dollar, under 100? Not anymore. We're catching a bit on the dollar. We'll see. It would be nice for the market if we got a reversal where we had nobody buying our treasuries and nobody buying our dollar. That was probably the biggest fear factor going on last week, right? Nobody buying the treasuries, yields accelerating higher as the price dropped, and in the same essence, nobody buying our dollar. But that's reversing a bit, so we'll see if that holds. And we got the dollar back above 100. A lot of critical areas, right? Check it out. We'll go back to a 5-year weekly and check it out on a daily. And you're talking about testing out the lows we had in September. The low, 100.179, and we're basically sitting right at that area right now. 100.127 right now for the dollar index. And yeah, quite the acceleration on gold. And man, I already put the gold report out this morning, folks. Okay, Market Insights is coming out right now. But boy, some of these gold equities on a longer term basis, you want to see something, man. If you're interested, folks, check out the gold report. You can check it out. Look at these. Look at AEM. This is one of the strongest equities in the gold report right now. You talk about wide price spread, volume, conviction on a weekly basis. You just take out everything that we've done since what? February, and you push higher on AEM, you blow apart. Now, yeah, you might need some consolidations in some ways, but boy, there is a lot of strength in this gold market right now. That's why I'm watching yields. I'm watching the dollar, because that strength was nobody buying our currency and our debt. If that changes, you will face a little headwind. But I don't know. There's a lot of volatility in this market. It might not be as pronounced as last week, as the 90-day pause eased a lot of the tail risk of where the president might go. But you see over the weekend that we couldn't even get the market open in the time that tech stocks in China got a reprieve before the president pushed back already on his own policies, in terms of no one's getting off the hook, I think was the expression. There's going to be a lot of uncertainty, and you're probably going to have gold and the gold equities catching wind at their back for some considerable time with the type of uncertainty that is present in this market, and that seems to be going nowhere. But yeah, how about that? AEM, right? Was it AGI? Yeah, Alamos Gold, almost identical, right? Look at that chart. Whew. You talk about it, man. There's some other good ones in there as well, but those are at the top of the gold report. And boy, you talk about some moves on a weekly, you do it with volume, you take it out, gold's got some legs, man. Okay. Let's jump over to the story of the weekend, and we'll see. The day is young. We haven't even opened it. As I said, President already pushing back, but nonetheless, Apple, NVIDIA score relief from U.S. with tariff exemptions. So you do have to say, so what are we bringing back from China? Where's the war? But that, it just underscores. And yeah, even I was talking about, many talking about, right? With the type of investments Apple had made, it was to be expected that they would face some reprieve. But they have a reprieve for now. And it applies to smartphones, laptops, hard drives, computer processors, memory chips, flat screen displays, TVs, phones, computers, chips. So I guess we're shipping back clothing beyond that? As in, those are the jobs coming back? You have to, where does it? And we can all speculate, okay? For what it's worth. The exemptions cover almost 400 billion of U.S. imports. Yeah. Including more than 101 billion from China. Man, right? And this is where smartphones share of U.S. imports from the world, 81% on smartphones. Computers, 26%. The value of those imports, 41 billion on smartphones, 36 billion on computers. Yeah, and those two alone represent almost $1 out of $5 for imports from China, just smartphones and computers. So it's a huge one. We'll see if today goes, but then you get the pushback already. But nonetheless, you got Apple shares. We're trading up by $12. Now, here's the kicker. You get into Apple, all right? And we talked about it on this show. I put it in the newsletter. You know, getting into Apple at 2021 prices, a lot easier to stomach, okay, than getting into Apple at 25% above where you were trading just a few days ago, with the premise that the uncertainty won't end. So yeah, we have the S&Ps, NASDAQ, Dow, all bouncing to the 50% retracement. We're lining up to where we were on the lows of March 10th. And you have Apple up 25% from the lows that are thereabouts. You check out NVIDIA shares. We're going to open up by about $5. NVIDIA just traded from 83 to 115, folks. Yeah, that's $32, and they have 25 billion shares. That's almost 800 billion in market cap. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got 12 minutes to go until the opening bell, and we get the S&Ps up an even 100 points. Market looking to open to green territory, and we are right back to these highs of Wednesday, 55.28. That's the only thing that's a little bit dicey this morning. We're trading up here. We were light on volume on Friday, and as I mentioned, you're already getting pushback of no one's getting off the hook. Here's what I'll say to that. We saw the pushback on the stories that came out when the tariffs were going to get paused for 90 days. We all heard how that wasn't true. It was true. They got paused for 90 days within about 48 hours from that story breaking. We've now seen the administration release something saying that those certain areas of smartphones, electronics, chips are exempt from the tariffs. And now you've seen the president push back on that. It seems like in the market is how we're reacting to this, that it might not be a worst case scenario. Okay, and as investors, we're going through the mentality of the game mentality of how it goes over. Okay, and you know what we get over is that the level of uncertainty is still ever present everywhere. Okay, and that is going to be the headwind in this market, folks. It doesn't have to be tanking everything for it to have a headwind. The level of uncertainty, even in Apple shoes, right? Tim Cook, he's a happy man this morning. No qualms about it, okay? But I'm pretty sure he wanted the market to open before the president tweeted pushing back on the own policies that exempted smartphones and computers from Chinese tariffs. You see how the constant basis is going to be there. Whew. Yeah. And, you know, the one thing I'll say, Jimmy, I love the contributions, but the slave labor term, okay, That's an exaggeration at best. The president himself uses Chinese products. Okay, is the president himself, Trump, was he employing slave labor? Okay, international trade does not all revolve around slave labor. It's quite an energized term. Okay, and you say sarcasm, but you've used that term repeatedly. We can have international trade without everything being slave labor, folks. Okay, there's this line of nuance, and the truth is always somewhere in between. And just because we produce things overseas does not mean that we're focused on slave labor alone. There is a middle ground here, and that is the fear of a trade war, that the middle ground becomes more and more difficult to find when somehow, if anybody produces anything outside of the U.S., you're doing it on the back of slave labor. It's a charged term, Jimmy, and it's not true. Okay, you can produce things outside of the U.S. without doing them on the backs of slave labor. It's a very charged term, man, and it's just not true. So, and that's not political. Everyone's going to go crazy. That's not how it goes, folks. Okay? Yes, of course there's slave labor in certain areas. No, that doesn't mean slave labor is everywhere if anything is produced outside of the U.S. Both can be true in that same statement. Okay? All right, let's talk about more of the news because we got plenty of headlines this morning, man. Okay. Yeah, and you got to talk about the pushback, okay? The pushback goes, Trump warns tariffs coming for electronics after the reprieve. And I wanted to pull up the headline. Nobody's getting off the hook, okay? Just moving to a different tariff bucket is how they go. So that headwind, yeah, it's going to go. All right, let's talk about Pfizer, man. They are in trouble. Pfizer, you talk about it. So they're abandoning their pursuit of a weight loss drug. Not what you want to do. Somehow, they're not even lower this morning. There's the spike on that news. They get it back. You're trading at $21.99 right now. And you jump over to Pfizer. So the headline there is they abandon their obesity pill after causing liver injury in a setback there. And it is remarkable when you look at some of the data in this, folks. They have $15 billion of drugs that are going to expire. I'm trying to get the exact point. Here it is. The company is expected to lose roughly $15 billion in revenue by the end of the decade. Folks, it's already 2025. 2026 is going to be here before we know it. And Pfizer has nothing, and I'm exaggerating, nothing, okay? But they got nothing in the pipeline, man. And the biggest area out there, weight loss drugs, they're discontinuing, okay? Yeah. Guess what? They're going to seek out acquisitions. But boy, that is not an easy way to grow, folks. And I'm being light, okay? Not an easy way to grow at all. They've been already acquiring, and they keep failing. That is one of the problems here. Yeah. $15 billion by the end of the year they're going to lose, and they're canceling drugs in that. So they're probably going to come after somebody. But boy, if that's their path to growth, how are they going to pay? You know that anybody who's that attractive is competitive, and their chart says it, folks. You pull up Pfizer, it's not even lower today, and that is a rough-looking chart. A 3-year weekly, you're back to $55 right there, and you're back to $61 on the COVID highs, and it has been a straight shot to negative prices, and boy, they have some issues, and it's escalating this morning for Pfizer. Goldman out with their numbers this morning. And yeah, you talk about trading revenue, man. Volatility can be a trader's best friend, especially when you're working at one of the big banks like Goldman, man. Check it out, though. Goldman Sachs, 515 from 494. There's the acceleration. You have highs out there of last Wednesday at 522. But yeah, equities trading revenue. Revenue more than $15 billion in 90 days. Where was the number? Sorry, I had it. There it is. Equity trading revenue rose 27% to $4.2 billion. We'll round up. $4.2 billion, $4.20 billion. Almost $550 million more from equities trading than what analysts surveyed. This is 90 days, right? I mean, you're talking about 7 million every single day. 6 million, 7 million every single day, more than what analysts expected. Now, I'm not sure if that one's going to continue. But yeah, equities trading surging 48, 45%. And yeah, the banks coming out, kicking off earnings season. Doing well. You had Morgan Stanley out there on Friday. They're going to be a little bit higher with the market this morning. But let's jump around to some of the Magnificent Seven. Amazon going to be up by about $4 on the open. Apple, one of the big winners, continuing higher, up by $14 on the open. We jump over to NVIDIA shares, up by about $5. Google, you're going to be up by about $3 right now in the open. We jump over to Tesla shares, trading up by about $6 to $258. Oracle shares up a few bucks to $136 out there. Salesforce, everything in that tech sector. NASDAQ 100 up 434, folks. One more segment. One more break. We're coming back for the open. We're coming back, folks. Stay tuned.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the stock market open, digesting. You get a reprieve of the tariffs for China for certain products in terms of computers, smartphones, but you also get pushback from the president the morning of. Nonetheless, how about Apple? Up by almost 7%, up $13 to $211. As I was saying, folks, though, buyer beware here. Important technical area. You're right back to the lows of March 14th. Now, you're talking about trading from almost 170 to 211. That's a $40 gain in Apple shares. And that puts you to 24%, something like that, bounce. So, yeah, you better believe that we're starting to get to levels that you're going to see some volatility. We're not getting everything back for Apple just yet, folks, okay? You're pushing 212 from 170. Be careful in these shares. NVIDIA shares up by about 2.5% right now. Amazon up by less than 1% right now. Not exactly in the same arena in terms of smartphone production, computer production from Amazon, right? Those were the things that were given a reprieve, not really in Amazon's wheelhouse to a certain degree. I'm sure chips, maybe, but you see, up 0.8% with this market when you have the NASDAQ 100 up by 2.2% right now. We check in on Pfizer on that news. Actually higher. Whew. You talk about being baked in, man. They abandoned their weight loss drug, and the stock's actually higher with the market, up by 0.8%. Seems like the market knows they have some problems in a big way. We check in on yields in the dollar, as that's the most important thing going on in this market right now, and we are getting a reversal of trend right now. We have buyers in the 10-year at the same time as we have the market higher, right? So we have yields dropping a bit. Sure, we got the 10-year approaching maybe 4.42, 4.41. Where are we? We keep getting higher price. No, yeah, 4.41 we're back to right now. 4.41, and we keep our eye on the dollar as we inch just above 100, 100.83. So keep your eye on those, especially if you're watching gold. Nobody was buying the dollar. Nobody was buying yields last week. One of the scariest parts of what was going on in the market when you talk about risk. That sent gold to stratospheric levels, 32.63. We've backed off a bit as we have the dollar back to 100. But one day is not a trend reversal, folks. And in general, you put that dollar on a daily, you can make the case that's fine in a bottom, okay? But boy, we need some follow-through. Right? We need some follow-through. We've bounced at an important critical area in the dollar at about 100. We're back above that area, but you got to see some follow-through. We've seen that every single bounce has gotten sold off in this dollar basically since January 13th. You got a spike high on February 3rd, and then you get to yields. And, yeah, that's its own animal, man. You spike higher, you spike lower. We do have a reversal right now going on in terms of higher price, lower yields, and we'll see if we can get some follow-through in the same way on the 10-year. All right, we get the VIX. Let's jump over to the VIX. A pretty reasonable 32. From a stratospheric 60, you're coming in at 32.28, but my expectations are we're going to see this VIX remain slightly elevated, folks. And you got to make the calculation, right? You get the news Friday. Was it Friday, I think, or Saturday? Maybe Saturday morning. That the China tariffs for smartphones, computers were going to be exempt. And by the very next day, or 48 hours later, the president's pushing back. Very tough to see no volatility priced into this market with that type of uncertainty present. All right, and you go a little bit bigger picture than that. Hey, being in Florida, man, this stuff matters. This one's from the Journal. Was that last night or this morning? Last night, 9 o'clock last night. Yeah, I was reading it early this morning. And you know, you're talking about Pompano Beach. You're talking about Canadians. We have a tremendous amount of Canadians, folks. Amazing people that come down here in Florida. They're a huge, huge part of tourism in this area. And, yeah, there are going to be some seismic shifts here. And they're just talking about one of them. And can't blame them in terms of a lot of them are going to have profits locked in. If you're a landowner, right, they buy a 2-bedroom condo. In 2019, for $235, they put $40,000 into it, and boom, they're going to take their $60,000 profit and just let things. Do you know why? Because of the uncertainty. Okay, now they get the Canadian dollar in there as well, but we were scared of what might happen. They don't know what's going to happen. Okay, they're not saying we know this is going to be bad. They just don't know, and it speaks worlds. Yeah, there it is, uncertainty. Okay. Boca Raton, Florida. This is part of the conversation that's going on in businesses as well, okay? And you're mixing politics, you're mixing business, but you got to get into people's heads of the uncertainty and the risks that go with making longer-term bets in the market. Yeah, so I'm sure you can imagine it's a great read in terms of where this goes. But yeah, you have, whether you're talking about Phoenix as well. Okay, Phoenix, Florida, some good vacation spots, but they're going to get hit when Canadians not quite up for the roller coaster ride if they don't have to ride it out. All right, what else do we got going this week? So you have Chairman Powell's going to be talking Wednesday. Not sure he's going to have anything to say with the type of uncertainty going on. I'm sure he likes what's happening in the bond market right now. And we got a little sell-off going on. We got the NASDAQ 100 down about 110 points from where we opened right now. S&Ps, what did we just give back? Quick 30 points almost? Yeah, in the S&Ps. Keep those fingers quick, folks. The VIX still sitting at 3283, but we are not done on this roller coaster ride just yet. We check on Apple shares. We just trade down $4, but still up 5.2% right now. NVIDIA shares, they give back some of the gains, but up 1.5. Look at this, Amazon almost going red. And Google shares up by 1.8. We check out Goldman Sachs on their numbers, up by 2.6% for Goldman Sachs. Yeah, Pfizer holding out to gain. So Pfizer's positive this morning and Amazon's negative, right? Make sense of that one, folks. All right, in terms of earnings this week, what we have going on. So we've got Goldman Sachs. Tomorrow we got Citi. They're higher by 2.7% right now. We got Johnson & Johnson up by 0.7%. You got Bank of America tomorrow. They're up by 2.2% right now. We get the airlines as well. United, let's check out the airlines on the bigger picture, man. These airlines, whew. United up by about 0.5% right now. Delta shares down 0.2%. JetBlue up by 1.2, but we got a $375 price point on JetBlue, man. That stock continuing to struggle. Some companies that stick out this week, American Express. They'll be out Thursday with their numbers. We also get D.R. Horton on Thursday. These home builders, man, you talk about being in the crosshairs. Home building material not exempt from China tariffs, folks. This thing from 200 to 120 on D.R. Horton. Lennar from 200 to 110. Stay tuned, folks. S&P's up by 75. NASDAQ 100, we're up by 309. Markets in the green. Be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's off by 62. We got a little bit of melt in this market right now. You got Apple shares giving up almost $7 from where we opened. We're still up by 4.3%, but you just had the S&P's trade down almost 50 points. Yeah, we're trading at 54.54, and we're up at 5,500. NASDAQ 100, we just lost 200. We're at 19,250. We're pushing 19,000 right now on the open. Dow up by 370 right now. We jump over to those yields in the dollar. Keep your eye on them, folks, because that's going to matter. And we got higher price, lower yield, and we got the dollar back below 100, flirting with that number, right at 100. We jump over the VIX as the market turns to roll over, and we get the VIX at 33.51 so far this morning. And yeah, you talk about these Wall Street banks, right? You talk about trading revenue. You talk about uncertainty. We got volatility. We got a trader's best friend. Yeah. Latest bank to say increased trading fueled its profit. And yeah, we went over $4.74 billion. And we see some of the other banks even later this week. Bank of America, they're coming out later this week. Look at these banks up by 2% right now. Goldman up by 1%. Ooh, they give it back, though. Look at that trading action on the open on Goldman. All right, they're selling this market out here, folks. All right. Yeah, gold back on off a bit, 32.22. You check out copper. So copper, if you're watching copper, looks like $4 is a nice bounce there. You know, we faced some headwinds in higher territory, but I think the market likely had found a bounce. Now you go over to two of the copper stocks, Freeport-McMoRan. On a longer term, maybe you have found a bottom, but you want to see follow through there. The one thing I'll say is that Freeport-McMoRan, not everything, okay? Many equities in gold or in the market had quite an acceleration on volume last week. Freeport-McMoRan was one of them. But you tie that into maybe copper finding a bid at $4, and these are the ones that start to get on the radar, folks. You know, the ones that have lagged, maybe you do, but look at that volume on Freeport-McMoRan. Right? We do 166 million shares last week. We bounced from the low. You reject lower price. You know, on a monthly, though, nothing like what we've seen. But nonetheless, you're still going to get volume for the second half of the month. Those are some strong numbers. And you're basically back to testing the lows of 2023. You put that back to a 5-year weekly. And, yeah, we bounced right where we were at the lows of 2022, We made a low of 24.80. And we technically got down to 27.66. The other one is Southern Copper, okay? Same thing. Look at this thing, right? You bounce. Now, you don't get the price action back, but you do it on volume. The one thing here is you're looking at Southern Copper, This bar from a year ago in March, folks, when you accelerated higher, man, we're through that entire bar. You did 11.2 million shares, okay? The one thing is we actually did more volume last week on that bounce. So that's encouraging on these copper stocks. I started putting them on my radar. You check out copper. Maybe copper finds a bid and you get the copper stocks. Now, you want to talk the silver stocks, all right? Some strong numbers, but when you compare it to the run that gold's got going on across the board, difficult to see how you're getting into silver. I mean, look at Pan American, all right? Great stock, one of the strongest silver stocks. Silver stocks are weaker, but of the silver equities in the gold report right now, Pan American, one of the strongest ones. You see the acceleration last week. We get back all of the prior week's losses. You trade up. We're at 26.39. You're positive by another 2% today on silver. On Pan American. But nonetheless, you're still just bumping up against this area that we've been in, right? You had highs back here in October. That's where you are on Pan American right now. Another one. I mean, look at First Majestic. Look at these silver stocks. Now, yeah, you bounced with volume last week. But, boy, that's a rough-looking chart, man. You know, you're getting into First Majestic, HE, and I'm not suggesting to do it, folks. I look at this chart. That's not screaming buy, man. That's a consolidation between $5 and $8. You want to trade it up to $8? Maybe that's a good mentality, you know, but you're right in the middle of this huge bar we had from March 10th. The high of that bar, 681 out there, and you see the difference sometimes, some of these. We jump over to MAG, which is another strong one. MAG Silver, strong one, okay? You accelerate higher, but look at this chart, right? You're barely back to where we were a couple of weeks ago. You're well off the highs we had in October. The silver stocks aren't showing it just yet. Boy, back to this market. You talk about quick reversal, man. NASDAQ 100 just gave up 300 points almost. Yeah, what did we just trade down to? 13 off there. Yeah, 260, 70 points. Whew. Man. Let's jump over to the VIX. 33.66. We jump over to crude prices. 61.70. I know. Wait for those gasoline stores to bring down those prices, folks. It doesn't seem like the gas prices have caught up to where crude is just yet. We were talking about last week, right? Our man Ed Young. Yeah, those the price of crude goes down. They can't find their ladder to bring down the prices. Beautiful Ed Young, man. Love that guy, right? Price of crude goes down. Can't find the ladder. Can't find it. I'd get the prices down, but I just can't find the ladder. The price goes up. They find that ladder quicker than they found anything ever in their store because they get those prices up. Takes them a while to put it down sometimes. It makes sense. It's the nature of supply and demand. If you can sell something at a certain price, you're going to sell it. The only reason you're dropping that price is to remain competitive and keep demand focused on your goods. So, yeah, haven't seen those prices drop just yet. And it's probably because who's going to drop those prices when crude's at $55, right? As in, you don't need to drop the price of gas that quickly. Now, you got refineries, you have the whole deal, but nonetheless, crude at $61 seems like gas prices should be coming down from even where I see them around. And yeah, we got the market dropping as well. Let's see how the big dog is doing. Apple shares, they're holding on to the gains, up by almost $10 right now. Microsoft up by 1%, or $3 to $3.91. Yeah, Amazon rolls over negative, off by 0.9%. Not getting the love that everybody else is getting in this market right now, as they probably weren't facing, at least not in electronics. Other things from China, but not electronics as much so with Amazon shares. NVIDIA up by 1.3% right now. Intel shares up by 2.8%. ASML up by 1.3%. You got Bitcoin right now up by $300. MicroStrategy up by $7, up 2.3%. Yeah, they bought some more Bitcoin this morning, and that's the way they're just going to do it. They're just going to keep buying Bitcoin, folks. That's their business, which is remarkable when you think about the fact it's basically akin to continuously leveraging up your position and dollar cost averaging as the market keeps going higher. And a great example of this is that, you know, the leveraged inverse ETFs, okay, direction, and I'm probably going to be doing a webinar for them coming up at some point. It will be free, and it's going to talk about how leveraged ETFs, especially inverse, which people love, but the leveraged ones, they're daily investment vehicles, right? The long-term return of leveraged ETFs, okay, inverse or whatever, does not reflect the long-term performance of the underlying. And the reason why is you keep ratcheting things up with greater exposure, and then the moves as you get higher take away a disproportionate part of the gains. That's the worry here with MicroStrategy, even with Bitcoin. One more segment, folks. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P is up by 77 right now. We have the NASDAQ 100 up by 287. And yeah, so Meta, they have an FTC case, and it seems like you're going to see Zuckerberg in there. But nonetheless, they're accusing Meta of breaking antitrust laws, okay? Now, what's amazing is going back in history in terms of this acquisition of Instagram and WhatsApp, okay, are the two that they're talking about in particular. And I'll pull over the article even. So this one's from the Times, okay? And what they're focusing on here is that Zuckerberg, he's going to be back, man. Zuckerberg 2.0, though, this time. Serial witness will take the hot seat again, okay? And, yeah, I don't think it makes any sense. You re-legislate what happened that long ago. Do you remember when they bought Instagram, folks? If you're old enough, unfortunately I am. $1 billion. It was unheard of. People thought that they were overpaying at the time. That's the time to do it. Now, you can make the case that they're a monopoly and you can break them up now, okay? But what does it have to do with what happened back then? Because back then it wasn't. They didn't break antitrust laws back then, Okay? If they did, why weren't they stopped by regulators at the time? Now I got a real problem with Facebook, man. All right, keep your kids off Facebook. It's and even yourself. All it does is drum up, hate, anger, all this stuff on social media that's destroying a lot. Okay, but it doesn't mean you get to go back in time and say that they broke rules by It's just it's a weird deal of how they're going to come over this one, because it wasn't as simple as they take over the world and control everything. And yeah, I'm sure that was the case to a certain degree. But how many years you go back? Now, that's aside from the fact you can make the case that today they are a monopoly. You can make that case. But what I don't understand is why you're going back saying they broke the rules back then, right? Those acquisitions broke the rules. That's a tough one, man. Meta up by 4/10. Markets in positive territory. NASDAQ 100 up by 268. All right, folks, stay tuned. We got our man Basil Chapman. He's coming up next with the Tiger Technicians Hour, folks. And we'll finish up with gold. Pulling back a bit at $32.20. Why not? The dollar, $99.92. Have a great Monday, everybody. Thanks so much for kicking your trading day off right here with me. And we'll see you tomorrow morning at 9 o'clock. Have a great one, folks.